Are you looking to up your trading game? Whether you are a beginner or a seasoned pro, understanding indicators could be an absolute game changer. In today's video, I'm going to reveal 7 top indicators that every trader, beginner or pro, should really know, and ones that can be used in conjunction with your current strategy or that can be used to build a strategy around. Stay tuned right to the end because I'm going to give you the potential of a powerful toolkit in indicators that you could use to really up your game. Now, these indicators can be a game changer if used correctly. Don't ever use them on their own. Use them in confluence with other indicators or with a strategy that you are already using. They can be very good at helping you spot trends or reversals, or even help you get in and out the market at the right time. So with that being said, let's dive in. So on the chart right now, I have got a 9 SMA, a simple moving average. So moving averages come in two different variants. You can have a simple moving average or you can have an exponential moving average. They essentially do very much the same thing. It depends on what you want to use. And for a lot of the times that I'm using them, it doesn't matter. Sometimes I have an EMA, sometimes I have an SMA. For me, they are basically just to help figure out where I am in terms of trend. So whether it's SMA or EMA, generally I prefer the EMA. I don't know why, it's probably just because I've always used them. So the moving average basically smooths out price and gives you a very clear indication of what trend you're in. Are you trending up? Are you trending down? Or are you kind of choppy and in and out of the EMA? In those cases, you are basically ranging. So they're very good at helping you figure out what kind of market you're currently trading. So like I said, they can be a great tool for helping you spot trends early and also a great way to get in and out of markets. So for example, I can show you a very quick example of how to trade these. Now, some people use a 9 and a 50, some people use a 20 and a 50, a 14 and a 50. It doesn't really matter. It just gives you an idea, where you can possibly get in. So for me, I'd probably be looking at maybe a 9 or a 14, let's say, maybe a 14. So it doesn't change too much, a very small change, but basically you can look at getting in on the cross. Like I said, you've got to use this in confluence with something else. So don't just use this as your entry and exit. Use this as in confluence. So for example, let's have a quick look. You can see over here, we've got an area of interest over here. So you can see, right? We have the cross, and then you wait until you actually cross above this area of interest. You can see on this green one over here, we've now hit above that. So you can potentially put your stop just below that cross if you want. You could go all the way to the swing low. You got to choose where you want to put the stop, and then you could always trade this up to like a 1 to 1.5. You could trade this to the next cross. Once a cross is back, you can get out. So that'll only be like a 1 to 1. So there's a lot of different ways. Like I said, you can use this to help you get in and out as well. So you can close on the cross there, or maybe you could just look at the next area of interest, which is kind of over here somewhere. So you could possibly look at getting out over there, and that would be like almost a 1 to 2. So that's a very quick example of how you can use the EMAs. Now, there are very many ways to use them. I'm not saying that's the way you should use them. Oh, and before I do carry on, that reminds me, this video is actually educational. So please don't do anything I'm doing. Don't just jump straight to a live account and start trading this and then moan because you lose money, okay? I'm just showing you what these indicators are, what they do, and how you can potentially use them. But at the end of the day, you've got to backtest for yourself and you've got to figure your strategy out for yourself. This is just educational, and always only risk what you are willing to lose, okay? So very important. So with that being said, let's jump into the next one. The next one we're going to look at is the RSI, or the relative strength indicator, okay? In most cases, you'll see it pop up on the bottom of your chart like this. I'm just going to make it a little bit bigger so we can actually see what's going on. So this momentum oscillator basically measures the change and speed of price movements. It ranges from 0 to 100. So the top being 100, the bottom being 0, with your levels 70 and 30 being your overbought and your oversold. So normally if it goes above the 70, it just means that it's overbought. And if it's below the 30, it means that it's oversold. So obviously this indicator is very good at helping you trying to identify the change in direction, right? Trying to figure out where price is potentially going to hit its bottom or its top. So like I said with others, don't use this on its own. Make sure you use this with in confluence with something else. So either price action or maybe part of your current strategy. So for example, let's have a look over here, right? So we have this area over here of resistance, and you can see we come in and we tap that at the top, and we actually have the RSI going into overbought. So this means that we could potentially look at getting into a position here. So that just gives you a very brief description of what the RSI is. It helps you identify where price might be turning around. So when it's overbought, this is a good time that, you know, you might see sellers coming in and taking over, or just trying to fight the buyers, and it helps to have an idea of price action as well. And you could also look at trading maybe other entry models. For example, if you were to then go down to the 5-minute or the 1-minute, so you can see it's tapped in, you waited for the tap again, you came down, and then you broke structure over here. So you broke structure again, and you could potentially look at getting in on this big move down. So you can see you have an FVG over there, so you could have potentially looked at getting in on that. So let's say you had your short position there, you were just going to the top of the swing high there, and again you could have just looked for this area, the next area. You look left, see where your target is, and that's 1 to 1.84. You could have even pushed further for the 1 to 2 and it would have hit that. So there's many ways that you can enter, and that's one of them. So that's the RSI. Gives you a good idea of where price might be turning around, but don't use it on its own, like I said, guys. Right, so the next indicator I want to look at is the Bollinger Bands. Bollinger Bands, there we go. Okay, I'm just going to leave everything default. I'm not going to be messing around with settings, because you only mess around with settings when it makes sense for a specific strategy. So for all of these, I'm just going to leave as they are. So the Bollinger Bands are a volatility indicator, okay? They indicate volatility. They consist of this blue one here being the middle band, and then 2 outer bands. As you can see, you've got the lower outer band and the upper outer band. And each of these are set 2 standard deviations away from the middle band. So in this one, similar to the RSI, when price is moving up to the top band, it indicates that there is a potential for price to bounce off of that. So it kind of acts as a resistance. It acts as, you know, an area where price could be potentially bouncing back and then heading back to the middle band, okay? So you can see a lot of the times it gets there, it bounces back. Now, sometimes it'll just float along with it, which means you're kind of heading in an uptrend. Bollinger Bands, I think, are very good to trade when you are in depending on the strategy, when you are in a ranging market. So again, this can help you get an understanding of when prices may be overbought or oversold. I think the RSI does it better. And they also help you understand market volatility, right? So as the bands, the upper and the lower bands get wider apart and you have a bigger sort of upwards movement, it shows you that this is a volatile time. You can see the bands start to spread apart. And when they're close like that, obviously price is moving a little bit slower. Like in this situation, you've got the upper and the lower coming very close to price. So it just shows that there's lower volatility. So it's a good indicator for volatility. Now, again, guys, you've got to use this in confluence, not on its own. You can see there we have a lot of, definitely an area of interest, an area where price kind of tends to come back to. And then over here, you can see price moving up, and you're waiting just for it to get to an area where you can maybe take a trade off of that. And this is exactly that. You have the price coming in, tapping that, and then you could potentially get in on a sell there, depending on your entry criteria. So Bollinger Bands, I think, is a great indicator. I haven't personally used it that much. I would like to try and test a few strategies out using it, but I've just got to find the time. But this is definitely an indicator that I think has a lot of potential, and that is why it's on the list. Right, next up, guys, is one of my favorites, is the MACD. I love the MACD. So let's get that on the chart quickly. Moving average convergence divergence. Okay, so let's have a look at that on the chart. There we go. This is the MACD. I'm just going to pull this up a little bit so it's a little bit clearer for you guys. The MACD is a trend following momentum indicator that shows the relationship between 2 moving averages of a security's price. It consists of the MACD line, which, as you can see here, is the blue line, and then the signal line, which is the orange line. And then it also consists of the histogram, which is these green and red candle-like bars in the middle of the MACD. Now, the MACD is great for identifying changes in the strength, direction, momentum, and duration of a trend. Now, I've actually shown a few very cool strategies using the MACD. Now, one of the ways you could use the MACD is just on the MACD cross. Again, when it gets high like this, it is showing overbought. And when it's lower, way below, you're looking at oversold. So make sure you can sell it on the cross over here. And you can also make sure that you're selling it on the first red. So for example, let's have a look here again. let's just mark up an area of interest. So you've got all of this over there. You've got an area of interest over there. As price comes back into that, you can see you have, let me just do a line here exactly where you have the cross. You have the cross right over there. Now you've just tapped and you've pushed down again. So this could be your entry as soon as you get the red candle printed, and you could be looking at a sell there. So you can take this down to the next area of interest, or just look for a 1 to 1.5 or 1 to 2, depending on how you trade this. That's your decision. So that's one way that you could do it. And like I said, there's a lot of different ways that you can trade these indicators, but the MACD, I love the MACD. It's a great indicator because I think it has a lot of versatility. You can use it in many different ways. So make sure you guys test it out. There are many different strategies on YouTube that actually talk about the MACD. I see the MACD come up all the time. Maybe it's because I like to search it, but the MACD has got a lot of very, very good strategies. So make sure you check those out and try them out. Next up, we've probably got one of the most, I wouldn't say controversial because it's not controversial, but a lot of people use it just because a lot of people use it and they use it wrong. And we're talking about the Fibonacci, okay? Now the Fibonacci is not so much an indicator as it is a tool. So Fibonacci, you would grab from there, here we go, the Fibonacci retracement. You would click on that and basically you're using the Fibonacci retracement for exactly that. You're looking at where the price is possibly going to retrace to. So let's have a look at this kick up over here, and there you can see. So here you've got the 50, and now the thing with the Fibonacci is often you're going to have these areas line up perfectly with other areas of support and resistance, or other, important areas, important levels. So let's have a look at this 50 quickly. If we just draw a little line over there and we extend this all the way left, you can see there, it's literally hitting an area of interest to the left there. You can see price tap there. So you can see that just with this move up here, I drew a Fibonacci, and that 50 extension is giving us a lot of confluence because it is actually proving to be a strong area of interest. So what you could use this for is, again, don't just enter a trade, because make sure you're using it in confluence with price action or in confluence with a strategy that you're already using. So you're just going to look at, okay, this is a good place to potentially buy. If your bias is already telling you to buy, then that is even better. And then also you've got a very, very strong buying candle over here. You can see this long tail at the bottom of this. This for me would be a good place. I could potentially see maybe setting up a long at the top of this. So as soon as that gets broken, we put our low, or we put our stop loss below the low there, and we look for just taking the high. Because if this is a continuation, if this is just a retracement and we are continuing, then we are looking at definitely breaking the most recent high. Now this is current price, so obviously I don't know what would have happened there, but we can look at an example further to the left. Let's just delete these. All right, so this push down over here, if we look at this area over here from the top all the way to the bottom there, once price did start retracing, now this pushed all the way up to the 70. Now the cool thing is, if you are looking at your retracement, the 50 is not really got any power to the left. The 60 has got some, it's got one area that's tapped, but as we hit into the 70 over here, you can see if I draw a line on the 70, let me go to the 70 and I just cover the 70, you can see this is actually much more powerful, and that's how I like to use it. I like to just look at my areas on the Fibonacci and look left to see, is that actually holding? Is it actually lining up with another area of interest? And this one does. So the 60, potentially you could have looked at the 60, you would have maybe taken a loss there, and then it pushes up to the 70, and then you've got a perfect entry here. You've got it pushing up, tapping back down, tapping again, and then breaking down. So the second it breaks this low is when you could potentially get in for a short. So the Fibonacci itself is derived from the Fibonacci sequence, and it's a fantastic tool to predict where price is going to turn. And it works very well with retracements in particular. So when you have price moving very strong in an uptrend or a downtrend, that I think is the best place to be using a Fibonacci, because you are moving, you're breaking highs, you're getting higher highs and higher lows. So you are constantly, moving in an upwards trend. So that's the Fibonacci. Love this tool. A lot of people get it wrong. A lot of people don't trade the Fibonacci properly, and I like to use the Fibonacci in confluence to, you know, a lot of stuff I do. I don't start with the Fibonacci. I will just use the Fibonacci when I'm not 100% sure. I'll draw the Fibonacci in there. I'll get some levels. It helps me pinpoint certain levels, and it can also help with your entry and your exit points very, very well. So give the Fibonacci a try. Search up online, you know, have a look at some Fibonacci related strategies, and have a look at how people use the Fibonacci, because it is a fantastic tool. It's one of my favorites. I do love the Fibonacci, and it's maybe one that I don't give as much love, and I should actually trade it more, because I really do like the Fibonacci, because every time I do use it, it actually does fairly well for me. Okay, so next up, guys, we're looking at the stochastic oscillator. So let me just click on that so it actually shows up on the chart. Now, this is kind of similar to the RSI. It's a very similar tool or indicator to the RSI. It is a momentum indicator. It compares a particular closing price to a range of prices over a certain period of time. Again, the oscillator ranges from 0 to 100, but this time your overbought and your oversold areas are 20 and 80, okay? So basically, if you're going above the 80, you're looking at it being overbought, and if it's below the 20, then it is oversold. So it is a fantastic tool to help you identify reversal points and make sure, again, that you are using this in confluence with something else. You know, whether it be price action, whether it be certain levels you're looking at. So let's just have a quick look over here. You can see prices pushed really far down here. So how would you get into that? Now, if you look left, this area over here has actually got a lot of traffic. So it is an area where you could potentially look at, you know, marking up this area as an area of interest. And then you can see price pushes down, it's pushing down, it's pushing down. And as it taps into this area, you're basically getting a cross there. This is where it is telling you that it's oversold. So you could potentially look at getting into a buy there. So you could do this in many different ways. You could get in directly, or you could just wait for a retest and then a push up, which it does actually have over here. You've got a retest, it breaks that, so you could put it on the top of that. That could be your entry. You have your stop below the swing point there, and then you could be looking at the highs over there, and that's pretty much a 1 to 2. Again, you can, you know, there's a lot of ways to trade this, but the stochastic is a great indicator because it does really help with, you know, giving you an idea of where price could potentially be turning around. So it's a great tool to be used in conjunction with a strategy that you already have, or maybe building a strategy around that. Oh, and by the way, before I do get into the final indicator, if you'd like to pass prop firm challenges and get funded 100K or more worth of trading capital without ever actually taking a manual trade, then make sure you go to www.propfarming.com. Over the past 4 years, Blue Edge Financial has dumped in over $2 million into developing what we believe is the best AI trading system for passing prop firm challenges. And not only passing them, but getting payouts too. And don't just take our word for it. We've actually helped over 800 of our community get funded 100,000 or more. And in fact, we're so confident with this system, we will help you get funded 100K or you don't pay a single penny. So make sure you go to www.propfarming.com and watch the demo. Okay, last but not least, guys, we have volume. The volume indicator is basically just that. It is indicating how much volume is in the market. Let's just pop that on the chart. Volume, there we go. It's this along the bottom, and it's basically doing exactly that. Let's go to the 15 minute just so we can see it nicely. So you can see, guys, lower volume, higher volume is basically measuring how much of a given financial asset has been traded in a specific period. So the volume indicator is basically a measure of how much of a given financial asset has been traded. So it's basically giving an idea of how much a specific asset has been traded. It's indicating the volume of that asset. So like you can see here, we have higher volume there, lower volume, and you can see this can be a fantastic tool to get an idea of where to actually enter maybe into a trade based on some other criteria. So volume can be a great tool for identifying trends, but also a great tool for a breakout trader. So it gives a very good indication of potential breakouts. So volume is a fantastic tool. I have used this with an EMA. I've used this in conjunction with an EMA strategy that I've done before, and I won't actually enter my trade on my criteria unless the volume dictates that I should enter. So volume can be a great tool to add to make sure that you are entering at the right time. So a great confluence tool to actually put into your tool bag. Well, there you have it. 7 of the top indicators that I think every trader should know and could potentially incorporate into what they are already doing, or maybe create a strategy based around these. By incorporating any of these into your current trading strategy, it could potentially help you make more informed decisions and possibly even get in and out of your trades at better prices, which could potentially overall improve your trading performance. If you did find this video helpful, please make sure you hit that like button, share with your friends, and if you haven't already, subscribe to the channel. And also make sure to hit that bell notification icon so you do get informed every time we upload a new video. Make sure you leave a comment down below which is your favorite indicator. Even if it's not one on the list, I'd love to hear it. With that being said, guys, make sure you check out this video over here. It's a great video and one that I think you will find very interesting. With that being said, that's it from me. Goodbye until the next video.